Hello everyone, this is Stock Market Daily. Thank you for joining me today. It is April 29th, 2023. As always, this is not financial advice. Please don't copy my trading strategies because you will lose money. This is only for educational purposes. So I wanted to wait a day and make this video on Saturday because it's the last day of the month and I could finally give you guys a final tally for the month of April, a total of collecting premium from selling options. So here is the total. You could see in April was the highest month thus far at 41,451. Even though there's been challenges this month in the last couple of weeks, we had very low premium on the SPX options, and it still turned out to be a very good month. Okay, so let's take a look at the SPX. You could see that we had a little bit of a gap down pre-market. This is due to the fact that finally Amazon ended up selling off because they had earnings, and during the earnings call, there were some, the CEO mentioned a few negative items about the AWS business. So we did gap down and we essentially filled the gap, sold down a little bit and pulled back, hit this prior resistance level, broke through it, and not quite made it to this one here, but sold off a little harder back to the resistance level, and finally made it to this resistance level. And we pretty much danced around it the entire day, a little bit higher, a little bit lower, broke down, and only more buyers step in and end the day on a new high for the day. So great news if you're long. The stock market is, ignoring anything to do with the banks. That news is seeming to kind of go away, even though the news for the regional bank First Republic is getting worse. And now we are pretty much right at where we're looking at the 4,200 level on the SPX. Okay, so let's take a look at the flex grid on my screen. This is the screen that I'm looking at when I'm trading. This was an interesting day. And the reason for that is because, the two most weighted stocks in the S&P 500 is Apple and Microsoft. Then we have Amazon, which is much lower weighted, but it's the third, then Nvidia and Google. They keep going, obviously, but these are the ones that I have on the screen. And then I have my advanced decline line. And up until recently, I was using the advanced decline line of the NYSE. So there's far more stocks in the NYSE, but I decided to switch it to the ADSPD. That is, again, ADSPD. And this is the advanced decline line of the S&P 500. So what I saw right off the bat is obviously the advanced decline line was green candles, green shoots, nonstop pretty much for the first 20 minutes. However, we have stocks like Apple selling off. We had Microsoft that wasn't really selling off, but it wasn't really popping up until here, way later. We were seeing lower highs. However, it wasn't really moving that much. We had Amazon selling off very hard. And pretty much this is what we were all waiting for and looking at on Thursday. We had Nvidia that wasn't doing great. Google wasn't doing great. However, all these other stocks were in the S&P 500 were doing really well. And eventually, Microsoft had this pop and they couldn't be stopped at this point. So you could argue that Microsoft led the way for the market to be, hit new highs and brush off the negative news from Amazon and the banks and everything. But overall, it was, I think the rest of the S&P 500 carried the weight of the SPX. So it wasn't just the biggest companies that were weighted the highest. It was pretty much majority of the stocks in the S&P 500 that led this kind of, let's say, a rally mid intraday. So um, now for me, unfortunately, and unfortunately for us, we can't see the Friday um, diagram here. It's only on May 1st, which is the Monday, so we don't have that data anymore. But I did have two options that were at the 4100, and they were they were rolled, I believe, from Wednesday into Friday, and they obviously expired worthless. I also opened up a 4105 put, and I collected something like $240 or something, 235, I believe it was. And when the market sold off slightly, I was nervous that the S&P is not going to hold. In fact, I was hoping that it wouldn't because I have all of these here. And I ended up buying the option back, which clearly I shouldn't have. But anyways, at that point, it seemed like it was a good idea. And that was my only trade for the day for a while. And at some point, I realized that we're hitting some new highs here, and we still have this banking issue that's looming over our heads. Amazon didn't didn't do well, and I knew that we're gonna see some. I figured we're gonna see some kind of a pullback. So and I also, the other part of it is I also made no money selling anything. I just made one trade on Friday, on that morning, and that's it. I didn't have anywhere else to put a trade, I felt like. So what I did was I ended up selling a credit spread for May 30th, and you could see that here. I bought the 4,600 strike price and I sold the 4,300 strike price. And at some point, and I collected about $1,100, and at some point I was already up by 400 and something dollars during the day on this particular trade. However, I decided to keep it. I thought maybe it would still end up trending down, and I want to keep it at least until probably either Tuesday or Thursday. I thought that if we were going to sell off, this would be a good trade because on Wednesday we have Fed Day, so it's going to be a Fed speech day by Jerome Powell. So I thought at least up until there, I could get a few $100s more. Now, unfortunately, with the market hitting new highs, at the end of the day, I am negative on that trade. So um, if this trade continues to, if the SPX continues to stay in this same vicinity, that's okay. If it goes up higher, my position will get negative. But I did collect the premium, and that was counted in that total that I showed you earlier. So let's take a look back at these positions here. These were rolled from Friday into Monday. And unfortunately, we are already so deep in the money on these that I was not able to roll them from the actual strike prices. So the only opportunity I had to roll was to roll them to the same strike price, but for Monday. Of course, this is not ideal. You want to, if I'm rolling, I want to go ahead and roll it higher in strike price to get myself out of that position as the market continues to trend in that same direction. However, the only way I would have been able to do that is if I would have rolled all the way to Wednesday. So even rolling it to Tuesday at this point would not work. Only through Wednesday, which is the Fed day. I decided that I'm going to take my chances. I know there's going to be a lot more volatility and a lot more premium in the options on Wednesday. So I'm going to take my chances through at least Tuesday, and I'm going to roll them. Um, if I can't roll them up a strike price at the end of the day on Monday on into Tuesday, I'll just keep them the same. Um, what I may do is I may have to roll um, two of them or three of them into a Thursday at a higher strike price and keep two with the same strike price and collect the premium that way instead. I just think that if I roll them into, if I wait, there's a good possibility that the market is going to come down since we are hitting pretty much fresh new highs, that there is room for market to kind of come back down a little bit. We have a lot of data coming out this week. We have a lot of we still have earnings coming out this week. We have Fed Day. So there's going to be volatility, and I'm banking on the fact that there might be more premium. It might get a little easier to roll this week, and that I don't need to basically from Friday roll into all the way into Wednesday. That there's going to be opportunity on Tuesday and Monday to kind of let it do its own thing and see what happens. So I did collect money on these rolls. I haven't even counted them up because I just wanted to do the final tally. And that is all. This is, of course, not a pleasant position to have 5 options. They're at this point, if you count all these options, they are still less than what I collected. They're worth less what I collected for the entire month. So I mean, even if I were to take a loss on these right now, I would still be up for the month, which is good. But we're not going to do that. We're not going to collect. We're not going to take a loss. We're going to, if need be, we're going to roll them a couple of weeks ahead of time. I mean, if the S&P is going to be staying up in this area of the high 4100s. If need be, I'm going to roll them a week, 2 weeks. It doesn't matter. We're not going to take a loss. At some point, when one of them is going to be able to get out of the money, I might even break them up. So I don't really want to expose myself to more risk. But what I can do, if I could get, let's say I could get this one out of the money, right, by breaking it up into 3 options. So this one is worth 8,000. So if you divide that by 3, and of course you're going to have more risk, but then you could much more easily get out of the money by having it at a higher strike price. So there's certain ways that there's certain things you can do to pretty much remove yourself from being deep in the money to being slightly less in the money or even out of the money. But that's going to, like I said, this is going to take some higher premium to be built into the options. And I think we're going to see it this coming week. So I know it's kind of a long video. I appreciate if you guys hit a like. And if you haven't subscribed, please do subscribe. I do these videos every single day. And that's not as long, of course, but I hope it helps you guys to see what's going on. And I just like to share my progress with everyone. So thanks, and we'll see you in the next one. Bye-bye.